Ladies and gentlemen, many thanks, first of all, for the invitation to address this honorable public in this absolutely fantastic venue in Vienna. I will try in a couple of minutes to give you a snapshot of, first of all, why we have put in place a sustainable finance framework, what it tries to achieve, because this is the underlying issue, where we are now in terms of implementation, and then a couple of words about the next steps in the sustainable finance agenda. I think that it is fair to say that the European Union is committed to achieve climate neutrality by 2050. I think that is a strong commitment of the European Union that stays, and environmental sustainability. And I think that to achieve that, our economy needs a fundamental transformation. What we have seen in practice is that the current investment levels, they are not sufficient to drive this change in the real economy. And then we have to really look carefully how to cover this investment gap. And we evaluated this investment gap at around 620 billion euro. So that is what we need more than what we currently invest in the transformation. That is to achieve the Green Deal objectives, Repower EU, an additional 92 billion to achieve annually, to achieve the Net Zero Industrial Act. What happens is that, ladies and gentlemen, is that member states and public authorities, they cannot cover alone this investment gap. So we have to provide tools and frameworks to help the financial markets, to help the savings of our citizens to be channeled in a sustainable project that makes sense from the sustainability point of view and from the business point of view and from the risk point of view. So this is the stated aim of the framework. How to achieve it? I think that here we have the three blocks of the sustainable finance framework. First of all, we have to give clear signals to the real economy and to the financial markets where those investments are needed and under which conditions an investment could be labeled as sustainable, so as investments and investors have confidence that the money they put are truly sustainable. For that, we have the first block, which is the EU Taxonomy. The EU Taxonomy essentially defines sustainable economic activities, and those are activities that can bring a substantial contribution to environmental objectives, to climate and other environmental objectives such as biodiversity. But importantly, they do not provide significant harm to all the other objectives. So, and here we cover absolutely important and critical sectors such as energy, transport, building renovations, where indeed those are kind of the sectors where decarbonization is absolutely key to arrive at what we want to achieve. So once we have this first building block, then the second building block are the disclosures. Essentially, what we want to see that companies are disclosing the environmental performance in a public disclosure. For taxonomy, we have two metrics. We want to see how green is the revenue of a company, how sustainable it is. For an energy company, I don't know, 20% is coming from renewable or low carbon energy. This is a very relevant indicator for the company and the market. What is beyond the taxonomy sector and beyond this important sectors, we want the entire economy to transition, and even companies who are not in the renewables energy sector, they could themselves evaluate the environmental impact and disclose that to the market. Importantly, we also want to see what are their plans to improve the environmental performance. And for taxonomy, for instance, we have a second metric, which is the capital expenditures, key performance indicators, what they invest in order to green their activities. And then once this is disclosed to the market. It's the role of the financial market to play its role. And here we provide the tools for financing. Essentially, a company can issue a green bond to cover its capital expenditures in order to green its activities. And that green bond could be bought by an investor or a bank. And we also want to help investors to play a role. We have a climate benchmark regulation, and more in general, the sustainable finance disclosure regulation that provides essentially for investors the information concerning the environmental performance of financial products. So these are essentially the building blocks. In concrete terms, and I think that I will go briefly through this slide, what the framework does to help the transition. First point, it provides the tool, transparency tools on the company's status quo. Second, it provides for the possibility and the tools for the companies to communicate where they want to go, what is their transition plan, what is their strategy to improve the environmental performance and to reach the climate and environmental goals in the longer term, and how much money they need for that. It provides tools for the company to finance itself, and then it gives the investors the possibilities to contribute to the transition financially through investments. And then we have the taxonomy disclosures, FDR, EU climate benchmark, and of course the ratings. We want as well that there is confidence in the solidity of the disclosures. I think that the framework to be judged, it's fair to say it's young. I just, for a small anecdote, I was working on prudential regulations on MREL. Here, the central bankers, they know what I'm talking about. It's essentially about making sure that banks are not bailed out anymore, and they have enough capacity, internal capacity, and loss absorbency to withstand a crisis. And in 2019, I was essentially asked to be seconded to the presidency of the council, which at the time was my home country, Romania. And I was put to work on a file called Taxonomy. The word was absolutely intriguing for me. I have to say that for our policies, FISMA, it was really a novelty. And that was only 2019, where this file was under negotiations. And I have a very clear memory of that because at the time, my son is born. So now he's 6 years old. So the framework is essentially less than 6 years old because at the time we only negotiated the taxonomy regulation. It started to be applicable only in 2022 with the results in 2023 and 2024. So we have 2 years essentially of implementation. So it's early to judge and to have a definitive view about its impact, but I think that the early data show that there is some impact in the market. And I think that on that one, I'm very grateful to a very solid work of the platform on sustainable finance. There will be another distinguished speaker who will speak about the capital flows and what is the effect on the market of the regulations we have put in place, in particular of the taxonomy. I just have chosen a slide without anticipating that presentation. Essentially, in terms of taxonomy-aligned CapEx, these are essentially green investments that were undertaken by companies, around 1,800 that are reporting under the framework. So these are large European and foreign corporations present in the European Union. We have an increase from 186 billion to 250 billion in 2022 to 2023. So it is a sizable increase of 34%. In terms of revenues, again, 611 billion were aligned with the EU taxonomy, sustainable. We have an increase by 25% to 764 billion. So there is a good, let's say, beginning of the uptake. Nevertheless, we will see how the framework unfolds. And here in the European Commission, we are trying, and I think that will be my next slide, to see how we can do and help that the framework works in practice. I think that what is also fair to say is that we have put several regulations in place at the same time. Despite these good elements that I have just mentioned before, there is also a feeling of stakeholders and of the economy at large that there is also some room for simplification and proportionality in what we have put in place. And for this reason, the European Commission has put forward some proposals on 26th of February this year, referred as omnibus proposals. I think that to be kind of very simple here, the stated objective of this is indeed simplification. And there are a couple of elements that we are touching in the CSRD and taxonomy reporting in particular. There is another regulation, I will not mention it here. But what we try to achieve essentially through the simplification is first to reduce the scope of entities and corporations that are obliged to report, so the mandatory reporting. So the proposals aim at essentially have more room for voluntary reporting. I will not enter into the technical details of that. The other point also that we have seen, and another concern, is that our reporting framework and large corporations that are reporting, they also need data from the suppliers that are usually smaller companies, and they are indirectly affected by this reporting. This is called as the trickle-down effect. What we try to achieve is we want to reduce this trickle-down effect, and essentially we try to harmonize the data sets that a big company can ask from its smaller supplier for its own sustainability reporting. We try as well to limit the audit and assurance costs. And then there are some proposals to simplify and reduce the reporting standards under the CSRD itself. The last point of this proposal is indeed to have more scope for voluntary reporting for taxonomy. And here, maybe a nuance, we also try to have a more comprehensive reporting, and I will come to that maybe in the next and final slide. Essentially, this simplification proposal is our immediate priority. We hope that it will be negotiated and finalized soon because we need to look forward. And then for the future outlook, I think that at this stage, it's maybe too early to really kind of elaborate already a strategy, but I think that it will be fair to say that in the next year or two, there will be a strong focus on usability and implementation of what we currently have. We will try to review the first building block, which is the taxonomy delegated acts, and we'll try to update them, upgrade them, and simplify it to the largest extent possible so that the data I have showed and the progress is even improved further. The second dimension is of the future work would be to go and look beyond the green space, because one of the arguments that we hear from the stakeholder is that the taxonomy framework is very ambitious and very binary. Either you comply with it or you don't, and if you don't, there is no recognition. What happens in practice, and I think that it's fair to say that there are also investments that are trying to stop the harm or the pollution and doesn't reach the substantial contribution requirements, it's still a good investment for the transition. And I think that we need to see how to best recognize it, and that would be something that we will be thinking all about. Another important element is that only big corporations are subject to mandatory reporting, and the framework is adapted to them, but we have to think broader because the transition is about the entire economy. Especially, I'm thinking here about the SME dimension, And I think that the platform gave us a good report on how to encourage the SME sustainable finance. We will also review the SFDR regulation to ensure that it is coherent and the end users can and the end investors can find themselves in these disclosures. And of course, I will end here. It would be an illusion to think that, ladies and gentlemen, that the environmental sustainability and climate is an European issue. It's a global issue. So we indeed could fix a lot of things here in Europe, but without a global action, I think that the effects of our policies will not be there. And I would say that the international dimension and convergence will also be important in the years to come. I think that I would stop here for this short introduction. Thank you very much for your attention. I think that we have a couple of minutes as well to see if you have any questions, and I will be delighted to answer them.
And I can confirm that there are some minutes left for answer some questions. Are there any questions you have to Andrei Gurin? Ja, Andreas Breitenfeldner von der Österreichischen Nationalbank.
Andreas Breitenfeldner of the Austrian National Bank.
Much, Andrei, very interesting, and of course, I mean, since you are representing the guy we've already talked yesterday about, I mean, all these issues were already topic yesterday, and some of this criticism I just want to convey to you, and that was indeed that perhaps you've gone with your proposal a bit too far. That's the general meaning here in this room. Yeah. So, I hope I speak a bit in the name of everybody here.
Maybe the majority.
Even the central banks, so to say, yeah, I mean, asked for cautious, the European Central Bank asked for cautious approach in the sense to really to try to find some middle ground for those companies that are in between this 500 and 1,000 threshold. Yeah? And in particular for Austria, this is an important case because cement companies are not covered anymore by the regulations. So are you thinking about fixing this in a sense? Thank you.
Thank you.
Shall I take several?
Let me look if there are some others. Yes, Mr. Milischer, and well, let us have this question first, and then Laurent Milischer.
When will all this reporting...
Would you please introduce yourself very
Martin
shortly?
Quarker from Finanzjournalistenforum. I'm a journalist. And when will all these reforms in reporting standards will be effective? Thanks.
It's the point of time. And Laurent Milischer, please. And then we are going to make a round of answers, if you are fine with that.
Thanks. I have a question about the slide where we are showing the reporting and how it changed between 2022 and 2023. And I think you said, I think we see on that slide that it has an impact. Now we have a new measurement tool that allows us to measure in what directions CapEx goes and turnover goes. What makes you say that the measurement tool has an impact? And maybe I can phrase that slightly provocatively, please don't take it badly. My thermometer measures the temperature. It's not my thermometer that makes the temperature go up and down.
Okay, interesting. Okay.
Yeah, thank you very much. All very interesting and relevant questions. I think that the first one on the scope of mandatory reporting and then how to treat also companies indeed below 1,000 employees. I think that in the proposal, the idea is indeed to limit the scope of mandatory reporting to those companies that are above 1,000 employees. Those that are below, the idea is to develop a voluntary standard. So you know that essentially EFRAG was already working on a voluntary standard, but it's true with very much with an SME focus. I think that now they are also trying to think about appropriate reporting metrics for companies that are not SMEs, but are below the 1,000 employees. And I think that that would be the right forum for discussion and trying to find that good balance. Of course, this is just a Commission proposal. We don't know how the negotiation in the end in the Council will go. Maybe the level will be decreased to below 1,000 employees. That is, of course, the uncertainty. We have to see how the Member States and the European Parliament will conclude that discussion. But I take your point that it's absolutely critical to have a kind of proportionate and adapted reporting standards for this type of companies. Mm-hmm. Concerning the, I think that we had a question about when the reporting standards entered into force. I think that for the taxonomy, we already have essentially the reporting going on since 2022. For these reasons, we could indeed see, together with the platform, how this kind of reporting worked and which type of information and data we could have. And I think that we'll have a presentation later on this in this discussion. The CSRD, essentially, we have already the beginning of the reporting. It's fair to say that we don't yet have a concrete data set to be able to see what are the impacts of that. But before even starting, as I explained, the stakeholders already told us that maybe we were too ambitious in a way, that the standards that were proposed should be a little bit recalibrated. And I think that this is something would need to be done first before we will start the reporting exercise. And then on the last question, I think that yes, I agree with you that this is a thermometer in a way, but nevertheless, you have the same companies that in 1 year they said that they spent 185 billion for sustainable projects, and the other year, 2023, in that year, they said that they spent 250 billion. I mean, as a reasonable, and I know that I'm just a poor lawyer as a trading, but this is a fact. That means that in 2023, they spent more on sustainable investments, or at least they managed to assess and with confidence disclose to the market a bigger figure. That means that they take some effort to see whether they comply, and that is the result. So to be seen now how the next years would look like, and I think that this would be absolutely critical. We are looking forward to see then 2024 data based on the 2025 reporting and so forth and so on. I know that it is just the beginning, and as I said, the framework is very young in a way. We have also to be prudent and give it a little bit of breathing space, a little bit of time.
So I don't know whether, okay for you? So wonderful. So let us close it here. Thank you so much, Andrei Gurin, for opening this session and answering our questions. This was very, very nice of you. Thank you so much, ladies and gentlemen. Andrei Gurin.
Thank you. Thank you very much.